Okay, the big hand has hit the 10 after the hour, and away we go. This is Dennis Wilson with the Active Trend Traders. Welcome to Aftermarket Mondays. I want to remind everybody that all the materials we do present are for training purposes, and only traders should always paper trade any new method prior to the risk of their own personal capital. Remember, past performance is not necessarily a guarantee and or a promise of future performance. What are we after when we do our aftermarket Mondays? This is one of the free webinars that I offer with the Active Trend Trading Service. Excuse me. It usually is matched up with a Friday webinar, which is making money trading stocks and ETFs. This Friday, of course, is Good Friday, and so we are going to not have a webinar on Friday this week. And I will probably do a recording on Thursday just so it can be posted, but I won't be a live webinar. So what are we after? We're basically looking at some timely actionable intel at the beginning of each week, and this is for all active trend traders, both the premium and the non-premium members, and anybody else who wants to join in to the session. We want to do a real quick market review. Is it indecision time? 2 big days down to finish last week and 1 big day up to start the week this week. Very interesting times. Stocks, ETFs that may be setting up, and here's some of the improvements we made in the system in 2018. As you can see, Dow, S&P, now this was about 45 minutes before the close, so they may have actually improved on this a little bit going into the close, but the only indexes that are up for the year so far are the NASDAQ and the NASDAQ Composite. Active Trend Trading, of course, is doing fine, and we just continue to try to get into build some portfolio stuff and do all 3 of the strategies that we're working on. So let's take a real quick look at what's going on for the week. Focus on the 7 ETFs, Spiders, Qs, IWM, gold, oil, biotechs, and financials. Looking for an opening in gold. That's going to be the basically the bonus trade that we're going to do for the Active Trend Trading members. Our core stock holdings, we're looking to basically be in or trade actively. Tesla, BABA, NVDA, Netflix, and YY. We'll be looking at gold bonus trades in either the gold miners, either the junior NUG, which is the bullish side of that, or J-Dust, which is the junior inverse ETF of the gold miners, 3-time leveraged. When we talk about trading, there's 4 different trading outcomes that we basically can achieve. One is we win a little, we lose a little. Okay, those are 2 outcomes. One, we win big or we lose big. Our objective is becoming mechanical traders is basically to eliminate this big loss. Because if you're basically trading rules and actually following the rules, putting in the stop orders at say 4 to 5%, you're never going to have one of those big losses, and usually the other 3 entities will take care of themselves. So we eliminate number 4, and that's where our biggest risk is. Seasonality of gold. I'm also in the process, while we are talking about that, I'm also in the process of doing a, let me find it, there it is. Ship it over here real quick. I'm also in the process of doing an update on the seasonality for 2018. And as you can remember, this will be provided to premium members, and it covers all the ETFs that we are working with. It shows when their seasonality tends to take place, and then we'll also take a snapshot. Like here was the S&P last year, and we took a snapshot to say, okay, how well was the seasonality as forecast by the long-term? Like we had over 50 years worth of data to forecast the seasonality of the S&P. How well did it do in comparison to the actual market for the year. As it turned out, what we found out is that the S&P, or the spider, didn't follow this exactly, but it did hit the low points. And so if this is something you're interested in, you may want to jump in and get in as a premium member, just to be able to take advantage of these timing effect of the spiders. And what else we have? We have the spiders, we have NASDAQ, the Russell, crude oil, or biotech, financials, and of course gold was in there earlier. So speaking of gold, here it is. And one of the reasons why I really wanted to be able to provide JNUG, JNUG or JDUS, because basically through last year, 2017, it provided numerous opportunities to actually trade it. And even if we didn't capture a complete move, even capturing half of it would have done quite well with $1,000 investment, would have grown to 2811 by the end of the year by just catching one half of these four moves. And then when gold isn't trending up, you can always then trade JDUS. Similar type situation, JDUS 102, very short periods of time to be invested in, but a similar type thing. Actually, JDUS actually outperformed which is the inverse ETF. It outperformed the leveraged directional ETF that goes along with gold and the gold miners. So stocks are setting up for this week. Are we getting a dead count bounce, or is this more? Bonus trades waiting for setups on JNUG and JDUS. And then the ETFs that we're looking at, strategy 1, 2, and 3. I'm going to cover I'm going to cover 4 stocks that are actually not on the list except for Netflix, just so that you'll be aware of them, because they're looking kind of interesting. Remember the active trend traded rules. We've got 4 entry rules, 6 exit rules. And if you're an early warning alert person, we have a standby alert active right now. We're waiting for the proper entry signal at this time. Okay, let's take a look at those charts. And so let's see if there's any question. Yes, Eric, it is not a crapshoot, but at the same time, that's the way some people, in fact, do trade. Eric's referencing a graphic that we've utilized on some of our slides of it appears like it's dice with buy-sell on the dice themselves. And so, yes, investing and trading should not be a crapshoot. However, at the same time, many people, we count on it. I mean, we count on it. If you're a good trader, you count on people who approach it from the aspect that they think it is a crapshoot. So let's see what we got going on here. There we go. Okay, the S&P. We basically Thursday, Friday, hammered down to the downside. And I don't know if you heard who's the financial guy, Merkin or something like that. Not pronouncing it correctly, but he came in and said that all the rattling of sabers regarding tariffs on China, all that kind of stuff, apparently has brought China to the table to start negotiating some trade deals. So kind of interesting, and that's one of the reasons why we had a little bit of a tick up today in the S&P and the other entities. There has still been significant, damage that has been done. We have a lower high in place. So if we take out this low from February of this year, if that gets taken out, then, well, we can just define this as being in a short-term downtrend. If the S&P holds, and let's say it holds here at the 2600 level, or at the 200-day moving average, it held up there very nicely. that would give us an opportunity to kind of get long into a position. However, at this point, with everything slicing through all of the moving averages, with the exception of the 200, we can basically trade this as a, yes, there's a potential of a pop, but where's it going to pop to? If it pops back up into these moving average combos up here and then rolls over, that would give us an indication that we've got a dead cat bounce going on, and it would be a time to get short the market. So NASDAQ, similar type situation. It's stronger of the three indexes, although the Russell's kind of looking pretty good right now. As you can see, it dropped below the 100, didn't even come close to the 200, and then rebounded today. Nice rebound. Where did it rebound to? Right up to the 50. Is it going to proceed higher than that? We shall see. We do have a signal and a standby alert on the early warning alerts for those who are members of that. And so we're just waiting to see what it's going to do in here. If it blows on through that, then we're going to have to jump on a trade to the upside. But if we bounce around down in this area here, that's when we'd be looking at potentially an entry down in this area here where that big wick is. This was a great bullish signal today. However, these long, large range candlesticks, that does not, that does not provide great accommodations of how healthy the market is. Our Russell. There's Russell. As you can see, Russell inside day, which is a positive indication. We still have this we can extend this line down, extend it to the right. That's a trend line that's going on. Let's compare this over here to the IWM. IWM, as you can see, slightly different candle in effect, but we do get a TSI tick up. However, no crossover here yet. So this could be just a bear squeeze on the TSI, where it would squeeze together and then continue to roll on over it and fall some more. So we'll wait and see what's going to happen with that again. Of anything to trade to the upside, I like TQQ, which that is, and I like TNA. And I like those better than the S&P, the spiders, our UPRO at this time. Again, what I'll be doing is tomorrow I'll be kind of fishing down in this area here to see if we get a pullback down into the lower section of this candlestick here. But as you can see, inside day, typically that's a bullish signal. And take one more look at TQQ. There we go, TQQ. It was going to be inside day, but then it continued to just push on up, almost up here at the 820. The 8 has crossed the 50. The 8 has also crossed the 20. So we have the bearish crosses in place. That tends to increase the emphasis on this now, these moving averages now becoming resistance rather than and would tend to stop the progress of price action as it moves up. Okay, let's take a real quick look at 4 stocks that I think that should be interesting, and they're holding up fairly well in this weak market. One is Grub. Now, Grub is, as you can see, TSI just ticked up off the 0 line today. It's it basically held the breakout about the 105 level and pushed up a little bit of low volume on this tick up here. As you can see, slightly below average, but again, Grub looks interesting. Red Hat is another one. Not Rue, Red Hat. There we go. Similar type situation, taking a bounce off the 20 and moving on up. Red Hat had a good buy. Above average buying came in today. So it is basically just doing a real nice base here. with that base being between 147.86, or you can say just about 149 up to 156. So any flirting down here around the 20-day moving average again tomorrow might provide an opportunity to go ahead and jump on a position in red hat. What's another way you could trade that red hat? Is you could basically sell 150 puts on it that expire this coming Friday. It's a way to get the stock on the cheap. Oh, really? Just down the street from you guys, huh, Eric? And they don't know what they're going to do with all their new employees. Well, that's a good problem to have, I think. So let's see here. I like Netflix. I can't spell Netflix, but I like Netflix. Again, similar type situation. Netflix this is a pretty good move today on Netflix. Broke back out above its this little downtrend cup that it was starting to put in. So what would be the trade on Netflix? Somewhere about, see if we can pick up some at about 314 to 315. That would be a good bonus trade. With, of course, a stop would be down just below the $300 level. And so you'd have to size the position properly enough. So that would be, because that's almost a 5% drop. And so that's within the limits. And then the last but not least, FANG. There we go, FANG. Just keep your eye. FANG is an energy company that's doing pretty good. Now look at what we've got going on over here. And this kind of like this V cup, if you will, a little handle on the daily chart, and then it's popping up higher. Let me go back to the. There we go. And so there's what we're looking at here. It came all the way down to the 40-week moving average. Then popped up. It is pushing up against these past highs, but it is closing it at all-time highs. As you can see over here, intraday, yeah, it hit these highs here, but we didn't get any closes above that level. Its highest intraday was 132. We can see it's pushed above that now. So I would, just getting some good buying in shape. If the economy continues to shape up the way it's shaping up, the oil patch will be, we're going to need the energy to be able to drive the economic engine. And so, did I throw up grub? That sounds disgusting. No, I did, yeah, earlier. So again, this is one of those also. Look for that pullback into the wick, and the reason I say that, and I'll show you on a hourly chart, or on a here's the hourly chart. As you can see, it is starting to really push up here. It had nice little base here, has pushed up, broken out of this area here, and so now what we'd be waiting for is is basically that pullback into the moving averages, about 106 or so, for a continuation of move up again. So 106 kind of corresponds to just a little bit below the 8-period moving average on the daily chart. So, okay, my friends, that takes care of that's what I'm looking at for the week. There are some extra stocks that we don't normally take a look at, but that are holding up well with all the machinations that's going on in the market right now. So again, no webinar on Friday. There will be a webinar on Wednesday night for the premium training, and I'm looking forward to being able to chat with everybody about what's going on with that. So. For those of you I haven't seen for a while, Tracy, it's good to see you. Folks, have a great great rest of the Monday. God bless everybody. Aloha.